happening on that front as well. The commodities are also in action. On that note, let's take stock of all the important events you need to be watching out for in today's trading session. Now back home, it's the last Thursday of the month, which makes today the weekly as well as the monthly Nifty expiry. So watch out for any volatility that we're seeing. You have implied open already at 23,142. Not much penciled in for us, but it's unlikely that this expiry could be as flat as what the implied open is expecting. So, well, we'll just wait and watch what today's trading session pans out to be like. But overseas from the US, you have GDP data coming out, like we told you, as well as jobless claims. Shifting focus to what Europe is going to be up to today, the ECB rate decision will be out today. Remember, FOMC and ECB usually go hand in hand when they come out with their decision. We've already heard from the FOMC. ECB rate decision is going to be under focus, in focus next. Also from Eurozone, you have consumer confidence as well as unemployment as well as the GDP data also coming from Eurozone. So along with US, this Eurozone GDP data is also going to be key to watch out for. In terms of some global earnings today, Apple, Deutsche Bank and Shell are going to be some companies in focus. But when you talk about earnings back home, you have 6 nifty companies that will be coming out with their Q3 numbers: Bajaj Finserv, Bharat Electronics, L&T, Adani Ports, Adani Enterprises as well as Tata Consumer. And well, in terms of some corporate action then, it's the last day to buy shares of Coal India, IEX, Persistent Systems as well as Shriram Finance to be eligible for their interim dividend, to make it in time for their record date for the interim dividend if you wish to do so. So watch out for all of these cues in today's trade.
Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore.
All right, then that was the word coming in from Jerome Powell. But let's also take a look at what the Federal Reserve then did. They've left rates unchanged. Chairman also said that the central bank is in no rush to cut them again until inflation and labor market data made it seem appropriate. In fact, a rather hawkish Powell in his policy statement said that the central bank stance is well calibrated at this point and they're not in a hurry to be adjusting the stance just yet, even as data from the labor market then points towards stability. In fact, issues of elevated inflation continue to stick out like a sore thumb for the policymakers, but an outcome that is largely on expected lines. So no surprises there. However, here on, it'll be key to note the quantum of the rate cuts that are yet to come, with policymakers also looking at maybe 2/4 percentage point cuts over the course of the year then.
Okay, so while all of the focus was on the FOMC outcome last evening, you also had a whole slew of tech companies that came out with their numbers, and a barrage of those earnings is what dictated moves on Wall Street last evening, because you had Tesla that delivered a miss on their Q4 earnings and revenue. Revenues were up a meager 2% versus the same time last year, while the company's automotive revenue fell 8%. Operating income too slumped 23% on an annualized basis, and management has in fact cited price cuts across its Model 3, Model Y, Model S as well as Model X cars as a key trigger for the miss.
Alright, then meanwhile, shares of Microsoft slipped as much as 5% in after-hours trade on the back of earnings. Despite an overall beat, growth in the Azure cloud segment was lesser than expected. In fact, the company also gave a disappointing quarterly revenue forecast. And remember, revenue was up 12% year over year. That's the slowest growth coming in since mid-2023.
Well, let's keep it going with earnings. However, on the flip side, things were looking good for Facebook parent Meta, because that reported a beat on both top and bottom lines in Q4. Key commentary from CEO Zuckerberg saying he expects 2025 to redefine the company's relationships with governments. Sales in the Q4 jumped 21% year on year, while net income grew 49% to $20.8 billion as well, up from $14 billion a year earlier. On the AI front, the company reiterated Friday's announcement that it would invest between $60 and $65 billion in capital expenditures in this year going ahead.
Alright, then finally, IBM Q4 earnings topped Wall Street expectations for earnings and revenue. Shares rose as much as 10% in extended trading before giving up gains and settling at 9%. In fact, the company said that it expects full year growth adjusted for currency of about 5% and $13.5 billion in free cash flow in this year as well. Their software segment grew 10% on a year-on-year basis, partially due to demand for AI as well as strong performance from its Red Hat Linux operating system.
If you like this video, then like, share and subscribe to ET Now.